Brilliant. Welcome. Good morning. Today is Wednesday, September 30th, 2020. We'll be going through the pre-market overview today. So what the pre-market overview is basically an analysis of the newsletter that we send out. So we send out a newsletter every day, Monday to Friday, just before the market opens. And in that newsletter, we talk about 4 of the major markets in the world, what's going on with them, what we think might happen based on stats and probabilities. So we do the pre-market overview for 10, 15 minutes, well, 15, 20 minutes. Well, I'll expand on these concepts a little bit more and explain how we came to those conclusions. So if you want to get the newsletter for yourself, just email us newsletter@tradewithufos.com. We'll put you on that subscription list. So my name is Becky. If you didn't already know, my email address there is becky@tradewithufos.com. There's also the support team, support@tradewithufos.com. So you can email either one of us if you have questions about anything. We're happy to help. If you're joining us from within the Tradewithuf channel, you're already part of the channel. Then just a reminder, today being a Wednesday means that you have futures at 9 a.m. today and then options at 1 p.m. today, both Eastern time. Of course, Tuesdays and Thursdays are our stocks and investing days. And over the weekend, you'll have sharpening, one of which is a psychology session, the other of which will be methodology and sort of reinforcement of concepts, questions and answers, things like that. So that's for people within the Tradewithuf channel. If you're within or without the Tradewithuf channel or outside of the Tradewithuf channel, but you want to learn a concept from the ground up, these are the courses that we do: futures, stocks, psychology, backtesting and trading plans. They are live courses. You have access to them, unlimited retakes, as well as the recordings as well if you choose to enroll. There's also a 2-for-1 offer on classes at the moment, so I'll show you that a little bit later. The next one that we have, just in terms of chronologically, is the stocks class, October 3rd to the 9th. So that starts this Saturday. It starts at 10:30 a.m. Eastern. Okay, just need to put the disclaimer on the screen. I won't read it, it'll take me a while, so I will let you guys read it at your own pace. You can, of course, come back and pause the video if you would like, if you want to read it. Or you can go to the website, which is www.youcantrade.com, and you'll get additional disclosure information on there. In a nutshell, it's basically saying that, of course, there is a risk in trading. You need to be aware of that, and you need to be willing to take that risk for yourself. We will help you with ideas, educational content, demonstrations, but it's not advice. So it's ultimately up to you what trades you place and how much money you put on them, what risk you use, what brokers you use, etc. So again, you can go to the website if you want more of that information. Okay, so this will show you, it should come automatically. There we go. If you go to youcantrade.com and choose the Tradewithuf channel, you'll see that you can join the channel on a free trial. That's a 14-day free trial. You can also schedule a clarification call if you want to talk to somebody before you do that. And there's also the courses that you can look at. So if you click on the Browse Courses section, it will open up a separate page and you will see each of the courses that we do that you can learn more in detail about what they are, what they cover. If you click on course details for any one of them, then it will open up the separate page. Again, more information on there, and you can schedule a clarification call if you have any questions on the course. If you click the clarification call button, it will pop up a window. You just need to fill in your name and email address, as well as choose a time and date that you would like the scheduled call to be. We will then send you a link with the information to meet you online for that call at that date and time. If you have any questions, you can put them in the box so that we're prepared before the class with any answers that you might need, or you can just leave it blank. As soon as you click request, it will pop up to tell you that it's worked and that we will send you a link, and then just check your email inbox. Just one reminder, you can join us mobily if you'd like to. So if you go to the App Store, you can download the You Can Trade app. Nothing on Android at the moment, but it is on the App Store, so you can join us if you have an Apple product. If you would like to, just search You Can Trade on the App Store. Okay, so now we're going to go into the newsletter. So lots to cover. I will just briefly explain what it is for those that might be new. We look at 4 of the major markets in the world: the S&P, oil, gold, and the euro. So top 500 US stocks, 2 major commodities there, oil and gold, and the euro, obviously a major currency. Lots of orders move through these markets. Lots of trades move through these markets. So even if you don't trade them specifically, I'm sure what you trade will at least be correlated to or impacted by what goes on in these 4. You'll also notice that we go through a daily chart for each of these markets. Now, of course, different things happen on different timeframes. The daily chart is one of the most commonly used timeframes, if not the most commonly used timeframe, hence why we've chosen to do that. Again, more likely to suit you guys in terms of how you are analysing your trades. Now, for each of these markets, we're going to go through them one by one, and we're going to look at a couple of concepts. First one is climate. Climate basically means trend. What market direction is the market going in? But more importantly, what are the probabilities associated with that? So we use technology to help us with this. We use our Auto Climate app that analyzes market data for us and comes back and tells us what direction the market's in and the probabilities. We see that down here on the bottom. Now, ignore the lines for now. We're just focusing on the dots, the thickness of the dots and the color. Those three things will tell us what's going on. So we could have a thick blue dot. That would be the Auto Climate app telling us that we have a confirmed upwards climate, probability to the upside. We could have a thick red dot, confirmed downwards climate, probability to the downside. Or we could have a thin dot of either color. So blue is still up, red is still down, but the fact that it's thin, that's the Auto Climate app's way of telling us that we don't have any probabilities. We don't have statistical advantage. And on days like that, we do nothing. As traders, we don't want to be placing trades for the sake of placing trades if we don't have statistical advantage. So we let the Auto Climate app tell us whether we have statistical advantage or not, and if so, in which direction. So we'll look at climate per market. We'll also look at propagating. Propagating tells us how long we can expect that climate to continue based on what normally happens. So on the right-hand side here, these numbers show us if we're in an upwards climate, how long does that market usually go up for? Or if we're in a downwards climate, how long does that market usually go down for? So we have statistics based on what normally happens in these markets. On the left-hand side, this will tell us how many candles we are now into that move. So how many candles have we been going up? How many candles have we been going down right now? So from understanding those two numbers, we can get an idea of whether or not we have more probabilities for the markets to continue going in that direction, or whether or not it's more likely that the markets have come to the end of that and are more likely to change direction and go the other way. So again, it's using probabilities and statistics to tell us what's more likely to happen. By the way, all of the numbers on the right-hand side, you'll notice, are a decimal place. They refer to the amount of candles that a market trend normally goes up for or goes down for. I'm just going to round up those numbers. So whatever the decimal place, I'm going to round it up. So yeah, just add one effectively. So what we also want to understand is UFOs. UFO stands for unfilled orders. What that means is where we expect there to be buy orders in a market that can push it upwards, or sell orders in a market that can push it downwards. We are again using technology to analyze market data for us and show us visually on a chart. Someone just wanted my eye then. Show us visually on a chart where these orders are likely to be. If it's buy orders, then it shows us as a green UFO. If it's sell orders, it will show us as a red UFO. Again, showing us where orders are likely to be. If there are sell orders, we expect that price comes up to it, hits the sell orders and comes down. If it's buy orders, we expect price might come down to it, hit the buy orders, go back up. So buy orders push price up, sell orders push price down. And we see on a chart where they're at thanks to the Auto UFO app. So we'll look at each of these per market. We'll also come down and understand volatility. Volatility basically means how far we expect prices to move within given periods of time, or how quickly we expect price to move. So we look at the current implied volatility numbers, and you'll notice each of these numbers are a percentage. What these refer to is the expected movement up or down in 1 year as a percentage of their current value. So it's the annualized number, and again, it's a percentage of the current value. From that, we can reverse engineer it and understand what we would expect in terms of movement up or down in a day, in a week, and in a month. So again, these give us an idea of where price will move up or down, or how far price will move up or down within these given periods of time. The climate and the propagating give us a clearer direction or a clearer idea as to which direction that's likely to be, up or down, and for how long. And the nearest UFOs will show us where price might be likely to change direction. So again, we're using technology and probabilities and statistics, analyzing market data for us to come back and tell us what's more likely to happen. So it's easier for us to make our decisions. Just because something is probable doesn't mean it's definite. So it doesn't mean we just go do it straight away. There might be other factors that we look at, and we definitely manage our risk just in case. We could be wrong. Just because something's probable doesn't mean it's going to happen. But we don't want to act at all if we don't have any probabilities on our side, or if we don't have enough probabilities on our side. Hence why we do this process. So we'll go through this per market one by one, and we will look at each of these concepts before we come down to look at moves. Okay, so for the S&P, that's what we've got here on the left-hand side. S&P is the top 500 US stocks. This is the index for it, so the group of stocks. We see here a thin blue dot. That is the Auto Climate app analyzing market data and coming back and telling us that we have an upwards climate. It's a blue dot, but it's unconfirmed, meaning less probabilities, no statistical advantage really to the upside. So it's only just up, basically. No strength, no push to the upside, no probabilities to the upside. So again, we keep away from markets like that. Now, normally, the US markets, the S&P, would go up for 11 candles on a daily chart in a row, and we're on candle number 1. So if this becomes a confirmed climate and we have probabilities with the climate, we do have probability of a continuous move to the upside. But like we said, we're lacking probabilities on the climate itself. So again, we're going to keep away from that. When it comes to orders, we have a stack of sell orders here, 3401.20 to 3428.92. And a stack of buy orders here, 3246.59 to 3209.45. Again, that's where we expect prices to turn if price were to reach there. In terms of volatility, we would expect in a year on the S&P that it would move up or down 26.26% of its current value, which means in a day, up or down of 0.55 points, in a week, up or down of 1.21 points, and in a month, up or down of 2.53 points. So that's the S&P. Let's look at the next market, which will be oil. At CL, that's the continuous futures contract there for oil. Okay, so with oil, we have a thick red dot, a confirmed downwards climate probability to the downside. We also have the likelihood of a continuous move to the downside, because normally oil would go down for 7 candles and we're on candle number 1. So again, probability that the markets continue there to the downside. However, saying that, when it comes to orders, we have a stack of buy orders. Just get rid of all those. Stack of buy orders here, 38.05 to 36.92. And we'll see price has already only just touched that stack of buy orders and gone back up again. Meaning those buy orders are already working. They've already started to push price back up. So we have sort of pressure to the downside there with our climate, probabilities of a continuous move to the downside, but we have buy orders close by beneath us that have already started to push price up. So it might be that we get a little bit more indecision. Overall, we have more probabilities there to the downside when it comes to climate. In terms of closest stack of sell orders, that's up here, 42.86 to 44.03. In terms of volatility on oil, we would expect a movement up or down in 1 year of 46.13%, which means up or down in a day of 1.13 points, in a week 2.49 points, and in a month 5.19 points. Again, movement up or down. So that's oil. So again, overall there to the downside, but not as many probabilities as we'd like because we have the buy orders there in the way. If we look at gold now, so at GC, continuous futures contract for gold, interesting one here as well. I'm just going to spread it out a little bit, make it a bit easier to see. So here we have a thin blue dot again, weird arrow there. There you go, thin blue dot, unconfirmed upwards climate. So it is up, but lack of probabilities, lack of statistical advantage. Again, we keep away from unconfirmed climates. Now, let's say this does confirm itself. We do have the probability of a continuous move up because usually gold would go up for 6 candles and we're on candle number 1. So we do have probabilities of a continuous move there to the upside. However, lack of probabilities on the climate itself and just hit a stack of sell orders, which are doing exactly what we expect sell orders to do, which is push price down. It's already working. The numbers there are 1907.6 to 1925.5. Stack of buy orders very close below us at 1876.9 to 1851.0. So at the moment, we have sell orders just above us that have worked and pushing price down. We have buy orders just below us that we would expect to push price up. We have an unconfirmed upwards climate with probabilities that it goes up for another few days. So again, overall indecisive. Forces working against each other here. Buy orders and sell orders very close together. No confirmed climate, which means, again, we're going to keep out of that. We don't want to get involved in these fights. If we don't have probability on our side, we don't want to be a part of it. It just leads to a higher probability of losing money, which we don't want to do. So when it comes to volatility on gold, we would expect it to move up or down in a year of 23.28%, which means in a day, up or down of 27.7 points, in a week, up or down of 61.1 points, and in a month, up or down of 127.1 points. Okay, so that's gold. Let's look at the last market, euro versus the US dollar. That's the spot forex currency pair there. So it's looking at one currency against another, euro versus the US dollar. I'm just squidging it together there so that we can see all these orders that we have beneath us. Okay, brilliant. So with the climate, we once again have a thin blue dot, an unconfirmed upwards climate. It is upwards, but lack of probabilities, lack of statistical advantage. Normally, the euro would go up for 5 candles, and we are on candle number 1. So again, similar to the situations we've seen in markets before, we do have probabilities of a continuous move up. However, we've just hit a stack of sell orders that's doing its job and pushing price downwards. That's 1.1772 to 1.1900. I've just rounded that where it needs to be for the pip. So again, we have sell orders now pushing price down. We have an unconfirmed upwards climate, so not real probability to the upside, but probability that the climate continues to the upside. We also have a whole bunch of buy orders beneath us. I think it's 8, one on top of the other. The top one there is obviously 1.1597 to 1.1506. So again, different forces there. Close by buy orders, sell orders that are working to push price down, unconfirmed upwards climate, probability that it keeps going up. Again, no real clear direction either side, which means if we were to get involved in this and make decisions, we are making decisions based on the fact that we don't have probabilities stacked in our favor one side or the other. Makes our probabilities of winning less likely, makes our risk higher, and probably makes our reward smaller too. Again, as traders, we don't want to place trades for the sake of it. We want to place trades because we have probabilities on our side. Again, for the majority of markets that we see today, we don't have probabilities on our side. Only with oil, really, do we have an overall confirmed downwards climb. Now, when it comes to volatility for the euro, we would expect it to go up or down in a year of 7.96%, which is 59 pips up or down in a day, 129 pips up or down in a week, and 269 pips up or down in a month. So again, the volatility figures give us an idea of how far we're likely to see these prices move within given periods of time, up or down. The climate and the propagating will give us statistical likelihood as to which direction that's likely to happen, up or down, based on the probabilities associated with the climate and how long we would expect it to keep going in that direction. If we've come to the end of going in that particular direction and we have nearest UFOs nearby, or we have close UFOs nearby, then again, we would expect a change in market direction. So again, we are using technology, statistics, probabilities to help us make decisions that are more likely to end up being profitable for us. Manage our risk just in case we're wrong. And again, just because something's probable doesn't mean it's definite. So be careful. Okay, so that's everything in terms of the charts today. I'm going to come down now and look at news. So on the newsletter, on the second page, we have news here. Just to say, for those that may have got the newsletter yesterday, this was my bad. The news section there was showing you in GMT, so in UK time. Obviously, we want to show it in Eastern Standard Time. So that's what it's showing now. So Eastern Standard Time there on the left-hand side. So we go to fxstreet.com/economic-calendar, and we filter high impact news and US markets. Of course, you can look at news outside of that. You can look at reports that are due outside of that. Now, some of the news, once it's come out, we will see a bit of information, a figure in this actual column. We'll see it appear here. For things like debates or speeches sometimes, or reports, you won't be able to see any number because you can't quantify it with a number. For things that can be quantified with a number like employment change, GDP, manufacturing, payrolls, then of course we see the number here and we'll be able to see whether it was better or worse than expected. But again, for things like debates, reports, and speeches, you don't see it so much. So obviously yesterday we had the presidential debate last night. That would have caused a little bit of impact on the markets. Today, being Wednesday, 30th of September, we have some information coming out today, again, based on employment change and GDP. So again, high impact news. We don't make decisions based off of the news. It's an indirect force, meaning the only direct forces that can move price up or down are buying and selling. That's it. Buy orders, sell orders. So that's why we use the UFOs and climate to help us find these things. Having said that, of course, there are many reasons as to why people may buy or sell and therefore add buy and sell orders. The news is, of course, something that has an impact on that. So we need to be aware of what's coming up so that we can manage our risk accordingly, step away from the markets maybe. Again, analyze it the way you would with your trade plan, but it's not necessarily something that we're going to make decisions off of. So just bear that in mind. Okay, so that's me done for today. Hopefully the markets will sort themselves out over the next couple of days and give us a little bit more clear direction as to what we're doing, whether we want to go up or down, whether we want to go long or short. At the moment, like I said, lots of indecision in these markets, which I guess kind of reflects the world in which we live at the moment. If you want to learn more about what we do and follow us in our sessions, futures, options, investing, stocks, sharpening, where you can learn more about the methodology and psychology as well, then you can join us, tradictive.com/you-can-trade. There is a 14-day free access. So I get there are loads of places to learn how to trade. It might be confusing as to which one suits you best. So you can join us for a couple of weeks there, see if you like it and go from there. If you don't, no worries, you just cancel the subscription. If you do, then at least you've had a good couple of weeks to see that it suits you before you move forward. If you want to learn any kind of concepts from the ground up, we do stocks, futures, trading plans, backtesting, and psychology. The next one we have here is the stocks class. So if you go to tradictive.com/stocks live, you will be able to learn more about the upcoming class there. At the moment, you can register for any course, get an additional course for free. So buy one, get one free situation. So have a look at the website, see what courses we do, which ones suit you, so that you can make the most of that deal and get 2 for 1. If you have questions on anything, email us support@tradictive.com. Otherwise, we'll see you in the sessions later today if you're joining us from within Tradictive. Otherwise, I'll be back tomorrow morning. So I hope you guys have a good day today, good time in the markets. I hope they treat you well, and I'll be back tomorrow morning. Take care, guys. Bye-bye.